In this episode, we are going to talk about the revolt against the dollar, which is the de-dollarization and the rise of a new financial world order. The Russia-Ukraine conflict, apart from causing energy and food crisis, has also triggered the largest de-dollarization wave since the 2008 global financial crisis. And although Russia is leading the de-dollarization drive to offset the effect of US-led West financial sanctions against Russia, many other countries have also intensified their de-dollarization efforts due to growing concerns over the dollar's weaponization by the United States. But what is a de-dollarization? For many years, the dollar has been the standard currency used in world trade. For example, oil, gold, and most commodities are quoted in dollars. Many countries hold their reserves in dollars in the form of US Treasury Securities. De-dollarization describes a move away from this world order to one where nations sell their US Treasury to hold reserves in other currencies or gold and seek to use their own currency for transactions between their most important trade partners. Why do countries hold foreign currencies in reserves? There are two main reasons. The first is so that countries can meet their foreign liabilities. They have to meet obligations with foreign banks and other economic actors, and the foreign exchange reserves are an instrument to meet this obligation. The other reason countries hold foreign exchange reserve is to prop up their own currency when needed. Whenever there is a threat on a devaluation of a currency, what the central bank does is to purchase its own currency on international market. In order to do that, they have to have a reserve of foreign exchange that is used widely on international markets like the dollar, euro, or other major currencies to prop up their own currency. But why US dollar? Since the 1970s, the US dollar has been the undisputed reserve currency around the globe. Agreements with Saudi Arabia and many other Middle Eastern countries makes the global oil trade in the greenback currency. Trading oil and gas in US dollar intensified the position of United States as the authority of global trade, a shift from the traditional gold standard. While the euro surfaced as a strong prospect in the 90s, the dollar-denominated finance still grew, and economies like China and Russia had no choice but to hold US Treasury securities and accumulate massive dollar reserves. However, multiple geopolitical and economic factors are now turning the tide against the supremacy of the US dollar. If that system works, then why do some countries want to detach themselves from the dollar? Rapid globalization was already a teaching bomb situation for the greenback, but now China's rise as the next potential powerhouse and Russia's exclusion from the dollar-embedded SWIFT system is catalyzing this historic transition. After the breakout of the Russian-Ukrainian conflict early this year, US-led Western governments imposed a batch of sweeping financial sanctions on Moscow, including freezing its foreign exchange reserves. The idea that the US may move to grab anybody's asset who refuse to obey Washington's dictates is truly alarming, which is now causing more countries to diversify their reserve assets away from US dollar. There is another important factor driving more countries to push for a quicker phase of de-dollarization. The US Federal Reserve, led by egoists, only cares of Americans and Wall Street investors' interests, and the American central banks has in the past years frequently messed up on its monetary policy, creating cyclical liquidity ups and downs and inflationary crises like the current wave of over 8.5% inflation unseen in 40 years. That the US Federal Reserve raised its benchmark interest rate by 75 basis points in September 21st, the fifth rate hikes, and the third by 75 basis points this year, without thinking about its consequences on other countries, is yet another proof that US is using its currency as a weapon. With the Fed once again aggressively hiking rates, developing economic risk just as Latin American countries did after being forced into a debt crisis by the US drastic rate hikes in the late 1970s. Over the past decade, the world has witnessed many such economies including Mexico, Argentina, Thailand, South Korea, Greece, Turkey, and Sri Lanka, running into serious economic troubles because of the dollar-centric global financial system. Can the dollar continue to dominate in this changing world? Today, multiple geopolitical and economic factors are again turning the tide against the supremacy of the US dollar. The trend towards de-dollarization is not exactly a new phenomenon. Latin American attempted to move away from dollar in the 1990s. In response to US sanctions, Venezuela chose to pay for oil in Chinese yuan instead. Chile de-dollarized in the 1980s and generally avoided dollarization. In the early 2000s, Iraq attempted to sell oil in euros while Libya actively tried for years to create an African gold standard. However, the global financial crisis of 2007-2008 reversed this trend to de-dollarization. Over the last decade, no significant developments were made to diminish the dominance of the US dollar. With a rift emerging between the US and Saudi Arabia, the dollar faced a new challenge: the Saudi Arabia de-dollarization. With 17.2% of global exports, Saudi Arabia is the world's largest crude oil exporter. In the past, it was the biggest supplier to the US. It is because of oil that Saudi Arabia emerged as a core US ally in the Middle East. Saudi Arabia leads OPEC, and in the past, this gave the US an indirect influence over the global oil prices, which are denominated in dollars. This allowed American governments to run massive trade deficit and take cheap debt. Since the 1979, the Saudi kingdom has been a US proxy against Iran. Recently, the Saudi royalty has been particularly dissatisfied with US President Joe Biden's policy in the Middle East. Biden's decision to withdraw support for Saudi Arabia's military intervention in Yemen annoyed Rihan. Biden's recent Middle East tour was an object failure. He failed to achieve his main object to get Saudi Arabia to increase oil production. Most recently, the White House has accused OPEC Plus for aligning with Russia after his grouping of oil producers agreed to deep oil production cut. In turn, OPEC Plus has accused the West of wealth arrogance. The de-dollarization effort in China and Russia. Russia and China have a common interest in being less reliant on the dollar in the face of sanctions or anticipated sanctions. Over the past 10 years, Russia has pushed to de-dollarize its economy. It has reduced the use of US dollar in cross-border transactions, reduced the amount of dollars in hold, and create a new national electronic payment system. These moves are a hedge against the risk of American sanctions on Russia's economy. Meanwhile, China is motivated to de-dollarize its international trade and investments because of US-China tension over the past year. To Beijing, it seems necessary to prepare in advance if the US imposes sanctions over human rights and territory issue. The Russia-Ukraine war gives a brief look into the possible sanctions and impacts China will have to face if there is a conflict with Taiwan. On top of that, these two powerful economies recently said in a joint statement that friendship between the two states has no limit. Over the year, China has emerged as the top importer of Saudi oil. In 2020, Saudi Arabia exported $95.7 billion worth of oil. China accounted for $24.7 billion of that, while the US imports only $6.59 billion in oil. Saudi Arabia is planning to invest in Chinese companies. Aramco has signed a $10 billion deal with Chinese petroleum companies. Chunk of the Petro-Yuan oil trade has hit the headline. As of now, the 13.4 trillion euro-dollar market and the 25 trillion US Treasury market offer depth and liquidity that no one else can match. Yet, this could change in the future. Rising interest rates have strengthened the dollar, causing import bills of poorer economies to shoot up and triggering a global debt crisis. This might shake the global faith in the US dollar, and at least Chinese trading partners might become more amenable to trading in yen. Russian President Vladimir Putin recently addressed the BRICS summit, a grouping of Brazil, Russia, India, China, and South Africa. He spoke of an alternative mechanism for international payment and as an alternative to the International Monetary Fund's special drawing rights. Instead of denominating against the dollar, countries could use a basket of their respective currencies instead. Talk of Iran and even Saudi Arabia joining BRICS has emerged. If this were to happen, such a grouping would make up more than a third of the global GDP, over 25% of the global oil output, roughly 40% of the global iron production, and about half of the world's agriculture production. An expanded BRICS with its own reserve currency could seriously challenge the dollar. Russia and China are already engaging in a ruble-yen trade. Russian energy giant Gazprom recently announced that Beijing will start making payments for Russian gas supplies in the national currencies of the countries. the ruble, and yen. Frozen out by the West from SWIFT, Russia is now using Chinese cross-border interbank payment system. In due course, the cross-border interbank payment system could emerge as a big winner of the Russia-Ukraine war. India is openly defying American pressure by increasing its oil purchase from Russia. Now, Russian oil makes for 21% of Indian oil imports, up from less than 1% before the war. India is buying discounted Russian oil to curb inflation, and this trade is no longer denominated in dollars. Along with closer Russia-China ties, India's imports of Russian oil tends to reduce the dominance of a dollar, so are moves by NATO members like Turkey to buy discounted Russian oil. If such trends continue, the days of the US dollar may be numbered. Russia's determination to de-dollarize encourage other countries, the country under US sanctions, and the countries who hope to promote their currency to follow in its footsteps. Thank you so much for watching. As always, if you find this content helpful, smash that like and subscribe button, turn on the notification bell to be notified every time I post a new video, and see you in the next video.